So, first of all, many apologies for the session as it couldn't get started on time because of the technical issue. And secondly, I welcome you all to the day two for this live webinar session. My name is Sanya Asif, and we were discussing September December attempt 2025. Because of like going through the whole of the exam and discussing each and everything with you people, this is how the whole thing has been designed in such a way with such an aim that you should learn that which things you must keep in your mind while attempting your exam. As let me just get through the whole thing uh, quickly. Your exam is a computer based exam, which will be of 3 hours and 15 minutes. You must keep aside 15 minutes for planning purposes, and the rest of 3 hours shall be spent for constructing your response. So I believe that for every mark, you will be having 1.8 minutes. And according to that, whenever you will start doing any question, you really need to have a target ending time. As in, if you start with section A question first and you're going to deal with the first question, which is of worth, let's suppose 10 marks, then technically 10 marks into 1.8, you will have 18 minutes to get done with that particular requirements. And in a broader sense, the whole question A shall have to be completed in 90 minutes because section A question will be carrying 50 marks, and for a question which is carrying 50 marks, sorry, one should be spending 1.8 minute according to each mark, which would mean that you will be having 90 minutes, 1 hour and 30 minutes precisely in order to get done with that particular question. So for instance, if you are going to start with any question which is going to take a little bit more time, that is going to give you a kind of sense, a kind of sense that the next requirement will have to be covered a little quickly so that you may eventually be having much time in order to deal with the rest of the paper, because completing your exam on time is the most important thing. All right, so last day, as we started off with question number one, which is of worth 50 marks, out of which your concepts are going to be tested for 40 marks, while 10 marks will be allocated to professional skills. I mean, the way you are presenting your answer would matter as well. So, in your section A, you will either be provided with 5 exhibits, 4 exhibits, or 3 exhibits. And for instance, if you are given with 5 exhibits, then fifth one is the last one. As in the question, you are given with 4 exhibits, so fourth is the last one. What you have to do is that leave the last exhibit precisely, and you will have to deal with the rest of the exhibit so that you may come to know what exactly the question is. And then you will have to click on the last exhibit and you will have to go through each and every requirement step by step. So technically, we are done with multiple requirements related to this question, except for the one related to Karen. The requirement C is still left to be handled. And here they say that we need to prepare a memorandum. For all those students who were a part of our day one session, they must know that in the start we were asked to prepare meeting notes. So we had to make a proper format in order to address that the notes are being made for internal discussion purposes in between the team members. And see, this is like for the second time another communication style is being asked. So the thing is, here, as far as requirement C, now you will have to make a memorandum and then you'll have to discuss each and everything which is being asked under this requirement. Okay, so they say that the first issue is the taxation of partnership income, for which Exhibit 3 is important. And when carrying out this task, you should note that Karen did not have a UK income tax liability in respect of the tax year 24-25, and you should ignore her overseas property income for the tax year 25-26. So, does consider that she doesn't have a UK income tax liability, and you need to ignore overseas property income while doing the calculation. And what do you need to do now? First of all, requirement C1 has further sub requirements. You will have to calculate the total taxes which will be payable by Karen in respect of her income from the partnership from the tax year 25-26. And then you need to explain the dates by which the tax you have calculated will be due for the payment, and comment on Karen's statement regarding pay. Now, this whole question is carrying 7 marks, and this is like divided into two parts. Now, I do not exactly know that how many marks are associated with the first requirement and how many marks are associated with the second requirement, though we may access the standard solution in order to see that what is the marking strategy. But here, when as a student a question comes in front of you, then you do not know that out of 7 marks, maybe 5 marks are associated with calculation, while 2 marks are associated with explanation, or maybe it's a split of 3 and 4. So, what usually we consider that out of the total marks, half marks are associated with calculation and half are associated with the explanation. Now, if 3.5, and to be on a safer side, I'll take it as 4. 4 marks are associated with first requirement, and 3.5, just again, to be on a safer side, I'll assume 4 marks are associated with the second part. When it comes to a pure theoretical part, which the second requirement is, then at least I'll be producing 4 valid points in order to grab 4 marks. You really need to be conscious enough with respect to the number of points that you are going to produce in order to score properly. I mean, you need to see that when a question is purely theoretical, then the marks associated with that requirement will become very important in actually letting you decide that how many valid points you will be producing. So in this case, for the second requirement, I shall definitely be trying to produce 4 marks, so that despite not knowing that how many marks are exactly allocated to this requirement, but still I'll be playing on the safer side, right? Okay, so the first thing would be that I am going to make the memorandum, and then I'll be doing the calculation. But considering obviously there is a gap of one complete day, I'm just going to open exhibit 3. It was a very short exhibit. Kindly read this exhibit once again, and then I'll take you to the solution. There's a question that has been dropped. It's like, if the question doesn't mention which property are being sold, residential or not, what should we assume? Number one, uh, they will definitely tell you. If they say it's a cottage, villa, an apartment, a house, then these type of properties are considered as residential properties. But if it is said, let's suppose a building, right? And you really don't know that whether it is to be considered as a residential one or a non-residential one. If it is like exactly a blank point, then you will consider it as a non-residential one. Otherwise, the chances are too remote that examiner wouldn't be telling you about this thing. Usually, they try to tell you by giving some sort of hint that what would you consider it as. If they say it's an apartment, villa, cottage, house, uh, then these usually are the words which we associate with the residential properties. But if they say the building, building is a very general word. Then, if no further information is given that either it's a residential building or a non residential building, then for building, we consider it's a non residential one, right? I'll keep on scrolling up time to time so that you may read the whole question. I just hope that you people have covered the above mentioned points, which is why I have scrolled it up a little bit. All right, I believe that you must have gone through the entire Exhibit 3, with which this requirement C1 is associated. And as I told you that whenever you're going to deal with advanced taxation exam, as majority of the questions will be requiring either the explanation or explanation along with a little bit or a comprehensive calculation. So we will always be like doing the calculation. We'll be always presenting the answer on Word document. But whenever we come across any question which would be requiring an explanation and a little bit calculation, even then we'll be using the Word document. And that tiny bit of the calculation will be handled on Word document. And in those places where either the calculation is required only or a comprehensive set of calculation is required, we will be using the spreadsheet for doing the calculation, because it will not be then easy for us to handle a comprehensive or detailed calculation on the Word document. But what we do is that we'll be mentioning the requirement number, as if we are going to deal with C1, we'll be like mentioning its number, the alphabet, the requirement precisely, and then we'll be like putting a heading, and the same heading will then be quoted on the spreadsheet. We'll be doing the calculation, and the answer will have to be quoted on Word document as well. So this is how, when your examiner will be going through the whole of your exam script, he will definitely come to know that whensoever your calculation is being mentioned on the spreadsheet, he will eventually be referred to that sheet. He'll be like given a whole set of steps with the help of which he can assess you. So it's like how we did the things yesterday. It's like we made a format, and with every requirement we made a heading. And see, even in requirement A, we had two options, and their calculations were required. So I did mention what the answer is, but their whole calculation was done on the spreadsheet. Now, here is requirement C. So the first thing is that I'll have to mention the heading. And for that purpose, what I told you, that you'll be like, either you will be typing the heading, or you are just going to copy paste the requirement and turning it into a heading. I mean, somehow the heading should be made. So it's a memorandum, number one. I'm just going to mention this is requirement C. It's a memorandum. So first of all, the heading of memorandum should be given, and how a memorandum is presented. See, just like how you open your computer, how you open your laptop, you must have made multiple folders. So the first thing while making the memorandum should be, you will mention for client files. I mean, just assume as if you have opened the computer, tax advisor, you have opened your computer and you're going to click on the folder client files. And then under the client files, there are multiple other folders, and you are just going to click on the client whose working is being done now. Um, Now, what the name of client is, it's Karen. And then you will be mentioning the subject, as with email, with memorandum, with notes. Even the subject of that particular document is always important. It is about the taxation of income for the tax year 25-26. And then we need to mention who has prepared it. Actually, You have prepared it, you are given with the data, and you are supposed to do the calculation. And in this point, at this point, you will be mentioning either tax manager, tax senior, or the safe words are tax advisor. So you will be like holding a position of tax advisor. This is like something you're going to do, and then you'll have to mention the date. And dates are always quoted in the question itself. So just click on the requirement. See, in the start of this requirement, you had received a mail on 1st of November 2025, and this is the date which you are going to quote while drafting your response. So it's like 1st November 2025. Now the thing is, see, this is like being arranged in a very haphazard manner. So you'll have to align the things, you'll have to present the things in a professional way. And this is like something which your examiner is exactly looking at. All right, so see, the alignment is done. Now it seems to look like a little bit organized thing. And then what I'm going to do, I'm going to click on the exhibit 4 where the requirements are done. And see, I am going to deal with requirement C1. Just copied it and I'm going to paste it on the Word document, because as what I've told you, I am just going to use the same thing for the sake of making my heading. Okay, so this is now the headline, the taxation of partnership income. And then under this, we were asked to do two things. So I'm just going to click on the first requirement that I'm going to deal with now. And again, this is mentioned over here. Now you are going to turn this requirement into heading. So it's like, I would say, total taxes payable by Karen in respect of her income from the patch partnership for the tax year 25-26. So I did not have to spend a lot of time in typing the things. And by copying pasting, one more advantage I'll be receiving, my heading is like going to be the most precise one, right? Okay, now the thing is that according to this thing, what do we need to do? I will have to do the calculation. It is like requiring the total calculation thing. And I think if the whole requirement is about doing the calculation, then spreadsheet is the best tool. Now, what will I do? I'm just going to copy the headings, Control C, and this is how I have opened the spreadsheet. Now I'm just going to mention Control V, and see, all the headings have now been pasted over here as well. Now I'm just going to take a start with the calculation. Have a look at Exhibit 3 again. They say that Karen became a part of this partnership business on 1st of December 25, and his salary has been set for £24,000 for a year, and his profit sharing percentage is 15, and the firm has produced accounts for 31st March 26. So the thing is that when the accounts were made from April 25 to March 26 for the whole year for the partnership, in the first 8 months from April 25 to 30th November 25, for the first 8 months, Karen was not there in the partnership business, but Karen became a part of this partnership business on 1st December 25. So, according to the partnership, first 8 months are going to be apportioned separately, and next 4 months are going to be apportioned separately. Though, practically speaking, the first 8 months profit should be shown, and then remaining 4 months are to be shown as well. But here, we are just doing the calculation from Karen's perspective. Why would we be like doing unnecessary calculation and wasting our time? That what has happened with this partnership business for the 8 months starting from April 25 to November 25? Because Karen was not there, and we have to deal with the issues only associated with Karen in this way. So it's like I'm just going to do the calculation for a period 1st April, sorry, 1st of December 25 till 31st of March 2026. So I'm just going to deal with 4 months only. Now, how many partners are there? There is Scott, Telsa, Wisp, and Karen as well. So the thing is, first of all, as the profit for just 4 months are going to be portion, I really need to see that how much of the profit is like related to the whole year, because I'm just going to extract the profit figure for just 4 months period starting from December till March 26. So it's like 345,000 pound. And I'm just going to do the apportionment of the profit for just last 4 months. So it's like now what the total figure is 345,000 pounds. It's like related to 12 months, out of which I need to see that how much of the profit is related to 4 months. That's going to be of 115,000. And then there are four partners in the question: Scott, Telsa, Wisp, and Karen. Now, both Scott and Telsa are not receiving any salary at all. But as far as Wisp and Karen are concerned, they are receiving a salary figure of 24,000 pounds for a year. But see, I am just going to see that how much of the profit is like relevant to 4 months, because right now we are doing the calculation for 4 months only. So here I am going to do the apportionment of the salary with respect to 4 months. So it's like if 24,000 is said to be the salary for a year, then 4 months salary will be equal to 8,000 pound for West. And similarly, 8,000 pound is the salary figure relevant to Karen. So what the total figure of salaries expense in respect of this year will be, that is going to be of 16,000 pound. After salary, I need to consider if there is any interest on capital in the question, which is well not there in the question, as no information is given with respect to this thing. And then I need to see that how much of the profit will be left behind. As there is no interest on capital in the question, so I just need to see that how much of the profit will be left behind as a balance. So it's like 115,000 less 16,000. The balance of the profit is of 99,000 pound. And I am just interested in knowing that how much of the profit will be allocated to Karen. And see, according to the profit sharing ratio, only 15% shall be associated with Karen. So it's like 14850, and in the end I may determine that how much of the profit in total is relevant to the Karen for the period December 25 to March 26. That's going to be of 22,850 pounds, right? So this is like said to be the share of profit for Karen for 4 months period. Though I may do the calculation for West, Tulsa, and Scott as well, but the required calculation was for Karen only. So why would I be wasting my time in doing the calculation for the remaining people? So it is like I have determined the total amount of profit that belongs to Karen for the period December 25 to March 26. All right. Now you got his share, which is 22850. And I hope you people know it very well that how the tax liability shall have to be calculated. It's about Karen. We are doing income tax computation for the tax year 25-26. And it's like how much of the profit do we need to consider? It's of 22,850 pounds, which we have determined just now. And profit belongs to non-savings income column. And there is like no income at all for Karen. So this 22850 will be taken as the total income. There is no qualifying interest payment, so I just take it as net income as well. So the only thing that I need to deal right now is the personal allowance deduction. The personal allowance figure is of 12570, and that's how we'll be able to come to know what the taxable income of this individual will be. That's going to be of 10,280 pounds. I hope you are getting this point. So this is like said to be the taxable income for Karen. And now we'll have to calculate the tax liability. You know the tax bands. Though the basic rate band could be extended, but neither the gifted donation nor the personal pension contribution has been made. So the whole of this 10,280 will be adjusted in the basic rate band. So what's going to be the tax liability? It's 10,280 pounds into 20%. That would be of 2056 pounds. So this is basically the answer. This is the income tax liability. But just have a look at the requirement once again. You had to calculate total taxes. They did not just say income taxes, they said total taxes. But I am done with the income tax. Now, what is left? What other kind of tax she might have to pay? What do you suggest? Yes, you're right. A self-employed person is not just supposed to pay income taxes, but he or she is liable to pay class 4 NIC as well. And so is the case with Karen. She will have to pay class 4 NIC as well, which is the NIC required to be paid by self-employed persons. Now, if you, for instance, forget that what class 4 NIC rates are, then can you see this study hub? The same interface will be there on the real exam day. On the bottom left corner, you will find a tab named help/tax tables. Just click on it. And here when you click on the tax tables, these are the percentages, the rates, which are definitely and always given to the students on the exam day. So for instance, if you forget that what NIC rates are, you may determine it by looking at this document. But I hope that majority of you must have remembered these rates. So it's like on the trading profit, I mean, for a self-employed person, I need to see how much of the profit for a tax year is, how much is the relevant earning for a tax year. On first 12570, there is said to be no NIC. Then from 1257 month till 50,270, there is said to be an NIC class 4 at the rate of 6%. And afterwards, NIC shall be charged at the rate of 2%. Right? So, okay, now I'm just going to give you this little task. Just let me know what is going to be NIC class 4 for this person whose trading profit for a period December to March 26 is of 22850. Let me just tell you that though a self-employed person, whether it's a partner or a sole trader, they make accounts according to their choice, but then we need to see that in which tax year their profit is falling. So in the case of Karen, this profit belongs to the tax year 25-26. So whatever the profit is, just quickly let me know that what is going to be her class 4 NIC. So I got one answer, and that is of, I think this is of 617 pounds. As 22850 is said to be the trading profit, which is falling in the tax year 25-26. On first 12570, there is said to be no NIC. While on the remaining earning, we shall be applying the rate of 6%. So 22850 less 12570, as on first 12,570 there's said to be no NIC at all, and on the remaining earning there is said to be an implication of 6%. So this is 616.8, and precisely, yes, you're right. You can simply straight away call it as 617 pounds. But for instance, if you want to keep your calculation in decimals, then up to 2 decimal point working would seem to be perfect. So it's like for 1 decimal factor is like given over here, so that's perfect. But you cannot go beyond 2 decimal points. Okay, now you have determined the answer. Well, you have to mention what the total taxes figure are, because they have asked you to determine the total amount of tax that Karen will have to bear for the tax year 25-26, and this is of 2672.8. So basically, this is the final answer. Let me just change the color as it's like too bright. Okay, so 2672.8, or you may simply say it as 2673. I'm just going to the Word document, and I'm just going to the point where the heading is given. I'll say that the total taxes are 2673, and that is it. This is the extra effort that you have to make, and just mention, refer to the spreadsheet for calculation, right? Okay, I just hope that you people must have got this point. Now I'm just going to take you to the second requirement, where we need to explain the dates and comment on Karen's statement regarding pay. Again, I'm going to copy the requirement, Control plus C. I've highlighted the whole thing. Control plus C is the shortkey to select it, to copy it out, and then I'm going to the Word document again. And here I'll mention it over here. Control V is how we are going to paste it. Now, this is my another heading, but see, I'm just going to change it a bit to turn the requirement into heading. So I will mention the dates. In fact, I would say dates on which the taxes you have calculated, this is something I have removed, will be due for payment, and comment on Karen's statement regarding pay, right? So this is how we have turned the whole thing into a precise statement. All right. Now, what are the due dates? See, there's a question, how did we know that profit was not after paying the salary? In case of partnership, the tax adjusted profit would always mean that this is the figure before deducting salary. And how would I say that this is like always the before payment of salary figure? See, when we are adjusting the tax adjusted trading profit, do you remember that personal expenses are disallowed? And if there is one person who is running the business, or there are multiple persons, I mean, partners who are running the business, whatever the amount these people are receiving from the business for their own sake, this is to be considered as their personal expenses, and they are definitely added back while arriving at the adjusted profit figure. So, with tax adjusted trading profit, the amount of I mean, the figure related to the salaries or the interest on capital, I mean, any amount which is like belonging to the owner has not yet been deducted. But in sole proprietor, we do not deduct it. Rather, the whole amount of profit is as it is taken to the non-savings column, because this is like all in all relevant to one person. In case of partnership, we have to apply the second extra step of apportionment of the profit, where we are going to remove the amounts related to either salary or the interest on capital, which is like not related to all the partners. Rather, this is like varying in between the partners. As you could see in the question, only Karen and Vis were receiving the salary, while Scott and Tesla were not receiving the salary. So this is how the apportionment would mean that anything which is already added back in the profit figure has to be extracted, and tax adjusted trading profit is always the one in which the amount of salary wouldn't have been deducted, because this should have been added back in order to determine an adjusted figure. Okay, so what is the due date of payment of taxes? When it comes to NIC 4 and income tax payable, they are to be paid on the same day. Usually, when the taxes are going to be paid, they are paid on 31st of January in the tax year, then 31st of July after the tax year, and the balancing figure shall be due on 31st of January after the tax year. Now, the thing is, as Karen is not required to make any of the payments on account. I mean, no payment is going to be due on 31st of January in the tax year or 31st of July after the tax year, because she did not have any liability in the previous year. I hope you remember that the first payment on account and the second payment on account are basically dependent upon the amount of tax payable and NIC for the previous year, as it is explicitly mentioned in the question that she did not have any liability in the previous year, would mean that we do not have any data to be picked up for estimation purposes. So, as Karen doesn't have any liability for the tax year 24-25, which is why no payments are on account are due to be paid for the tax year 25-26. So for this tax year, no payments on account are required. The whole of her tax payable and NIC 4 for the tax year 25-26 shall be payable as balancing figure. This will be due on 31st of January 2027, right? And then I have mentioned the payment things. Now we need to comment on the Karen's statement. Just open the exhibit 3 to see what exactly the statement Karen has passed. It says that I would expect my salary to be subject to pay in the same way as employment income generally. She is talking about the salary which she, as a partner, is receiving from her partnership business. But when will I have to pay tax on 15% profit share? So this is basically the statement that she has part, that she expect that her salary to be treated as employment income to be precisely taken under non-savings column, on which obviously this is like subject to pay. But that's not the case over here. She is not an employee in the partnership business. She is a partner, and whatsoever the partners are receiving from the partnership, whether it's like salary or interest on capital, so in the capacity of a self-employed person, everything shall have to be treated as a part of profit, on which I mean no, this is not subject to any pay as you earn system, right? So I would say that as far as Karen's comment is concerned, her salary from partnership business cannot be treated as a part of employment income, as she is there in the capacity of a self employed person. Instead, the profit, the salary, should be treated as a part of her profit, and the profit is never subject to pay as you earn, right? Now, the thing is, as in the start of this question, I told you that 7 marks are altogether allocated to these two parts. So I believe 3.5 are allocated to calculation and 3.5 is like allocated to explanation. To be safer side, I would take 3.5 as 4 marks. And when it comes to pure theoretical thing, then I'll be producing at least four valid points. So now I do have three valid points, right? So, what shall I do? I mean, instead of this, I do not find any other statement to be mentioned over here. Then I'll be like splitting one comprehensive line into 2 points. So, I think I should make the concept of pay not to be applied on the profit thing has to be given a separate status, right? So this is how I have produced 4 points, and if in case 4 marks are associated with this part, then according to the marks I have produced sufficient points. I hope you all are getting my point. Is this thing clear? All right. Now, coming to the last exhibit again, we do have requirement C2 as well, which is about the taxation of overseas property income. Again, for this, we have to take into account the exhibit 3 only, and it says that Karen is domiciled in the UK and she was non-UK resident from 1st June 21 until 5th April 25. The split year basis will apply in the tax year 25-26 by reference to 1st September 25. Now, this is basically the information that they have given in the first paragraph. And what the requirement is, we need to explain the amount of Karen's overseas property income, which will be subject to UK tax in the tax year 25-26, and why Karen retention of this overseas income has no relevance for tax purposes. Together, it is of 5 marks. Now, again, when I click on Exhibit 3, if you just look at the property which is situated in the country of Grania, you see that she owns a rental property which got purchased back in 2022 May, and she pays tax in the country of Grania. Uh, and The post tax income is of £1,300 per month, which is like going to be deposited into the bank account, which is not in UK. Again, this is like being retained in that overseas country. So keeping this thing in mind, as this question is once again about a theoretical thing, and it is like carrying 5 marks, so I'll be producing at least 5 marks. But if you think that maybe you might have to produce 6 points or even 7 points, then you may do so if it is like actually required. Otherwise, do not make unnecessary points, but do not make less than 5 points. At least that number of points need to be produced, which you see according to the marks associated with the requirement. So, according to that, if 5 marks are there, you'll be producing at least or more 5 valid points. But try confine yourself making exactly the same points, because if you just start thinking that whenever a requirement related to 5 marks will be given, then I'll be struggling to present 6 or 7 marks. By doing this thing, there could be a chance that you will eventually end up wasting a lot of time, which is obviously not a recommended thing. Okay, now again, I'm just going to click on the requirement. I'm going to copy the requirement, Control C, going to the Word. I'm just going to paste it over here, just turning it into bold because it's the heading, so it should be converted into a bold statement. I'm just going to underline it just to emphasize on it, and now I'm going to turn this requirement into heading. So it's like explain the amount of, I'm just going to remove the word explain, T capital, the amount of Karen's overseas property income, which will be subject to UK tax in the tax year 25-26, and showing why Karen's retention of this income in overseas has no relevance for tax purposes. So this is how I have like mentioned one more word in this thing in order to make it, in order to turn it into a complete heading. Okay, just to secure time, this is the information, and I'm just going to discuss it over here, and then I'll take you to the standard solution directly. See, when it comes to overseas income, this is definitely assessed in UK income tax calculation if the recipient, if Karen is a UK resident. So if you just look at what the status of Karen is, yes, she is a UK resident person for the tax year 25-26. What do you say? She's a UK resident person for the tax year 25-26, but split year bases are going to be applied because it is said so in the question. It is mentioned in the question that she was primarily a non-resident person. She has become a resident person in the midway, and there is like no debate to be provided over here that would that be possible or not. If they strictly say that split year basis would apply, then we have to follow it. So split year bases are going to apply from the date 1st September 25. So starting from the period 1st September 25 till, from the start of the year till 31st of August, I must say, 31st of August, she was a non-resident person. And from 1st of September 25 till the end of the tax year, I mean, tax year would come to an end on 5th of April 26, she'll be regarded as a UK resident person. So in this period, whatsoever the overseas income shall have to be included as a part of her UK income on which UK tax shall have to be paid. But we really need to be careful enough that whether she's like going to be treated as I mean, is she claiming a remittance basis or she's going to be taxed on a rising basis? See what is her post tax income on monthly basis. This is of £1,300, I believe, right? This is £1,300 per month. So this amount is subject to tax in UK. This £1,300, this is the gross figure, by the way. Sorry, this is the net figure, by the way. And what amount of tax has been paid in the country of Grenia? Has it been mentioned? I hope you remember that whensoever we are going to include our overseas income in the calculation of UK tax pro forma, we always consider the gross figure. And this £1,300 is a post tax figure. We do not know that how much of the tax has already been paid in the country of Grenia, maybe 8%, maybe 13%. We do not know that thing. But after paying off the overseas taxes, whatever the amount is left behind, this is something that she is going to receive. So the gross figure is 1300 plus the amount of tax which has been paid in that overseas country, for which we do not have any exact idea as far as the information given. Gross amount shall have to be included as a part of her overseas income in UK tax pro forma. So, what do we exactly need to know? Being skeptical that how much taxes she has already suffered in the overseas country, and then the amount subject to UK tax in the tax year 25-26 will only be in respect of the period starting from September 25 till the end of the taxes. So it's like September, October, November, December, January, February, and March, and 5 days of April will be ignored. So, despite the fact she must be receiving rental income for the whole tax year, but I'll be considering only 7 months gross rental income in my calculation for UK tax purposes, right? And Karen cannot choose to be taxed on remittance basis. Let me just tell you that she cannot elect for remittance basis. Why? What is the reason behind this thing? Let me just show you the main thing as well. Um, this is something which you can figure out from the background related to Karen. She cannot apply a remittance basis on her overseas income. It is irrelevant whether she retains the income in the overseas country bank account or if she's like going to get it to the UK bank account. This is like irrelevant. Whatever the income arises, she'll have to take that thing into account, though she will be taking only 7 months gross overseas rental income in her calculation. But why she cannot elect for remittance basis? What could be the reason? Could you figure out? She is now a UK resident, but this is not the reason. A UK resident person may have a choice in certain cases to apply. Uh, but they have a choice to choose one of the two bases. Either they would go for a rising basis or the remittance basis. Her income is more than £2,000. Had her income been less than £2,000, then remittance basis could be applied automatically. If income is found to be either equal to or more than 2000, then one may make a choice, but she doesn't have a choice. Neither automatically nor by choice, she cannot go for remittance basis. What is the reason? Otherwise, if she could apply remittance basis, her rental income wouldn't have been included in her income tax pro forma for UK. I mean, she did not have to take anything into account because she's not remitting anything back to UK. What could be the reason? No election could made for. She was like making a heading. Okay, let me just show you the requirement once again. Now just have a look at the requirement and tell me. Otherwise, those people on whom remittance basis cannot apply, neither automatically nor by choice. I mean, nor they can elect for this. They have only one reason behind this thing, and I'm showing you the reason as well. No, she just became resident. Before that, she used to be resident. See, the most important point is that she is a UK domiciled person. For those people who are resident as well as domiciled, they will always be paying taxes on arising basis. So, whatever the income arises, irrespective of the fact whether the income is brought to UK or not, the overseas rental income shall have to be included in her income tax performer. But considering she just became resident from 1st September 25, so from that date onward till the end of the tax year, she shall have to include only 7 months rental income in her UK tax performer. Being domiciled would mean that you may have a domicile under multiple cases. It may be a domicile by birth, it is maybe a domicile of dependency, or maybe a person is like said to be a long resident of UK, according to which they'll be considered as a deemed domiciled person. But here they have straight away said that she is domiciled because since her birth she is living in UK, so maybe she has a domicile by origin. By birth she's carrying the same domicile. The point is, I thought that once the income is more than 2000 and no election was made, they still have to pay the tax in UK. You are right, but the right to elect or not to elect is given to those people who are just residents but not domiciled. So if you're just resident but not domiciled and your income is more than 2000, you have a choice. Either you elect for remittance basis or not. Then it is fine. But whosoever is like domiciled as well, they do not have a point of making any sort of election at all. Yes, if a person is domiciled, then you definitely have to deal with UK taxes. I mean, the overseas income is definitely have to be linked to your UK tax performer. All right, let me just take you to the standard solution. I have already told you what the relevant points are. See, they have mentioned the heading. We also made a heading, though our heading was like quite long, but that's perfectly fine as long as the heading is like addressing to all the things, then it is perfect. And then what points your examiner has mentioned that overseas property income is only subject to UK tax where the recipient is UK resident. Due to split year basis, Karen will be regarded as non-resident from 6th April till 31st August. And the moment she became resident from 1st September till the end of the tax year, that income shall be included as a part of her UK tax income. As the post-tax income of 1300 is given, we need to see that how much of the tax she has paid in the country of Granian tax, whatever it is paid, that shall have to be added back into 1300 in order to determine the gross amount, and only 7 months' rent will then be included in UK tax performer. And this is like only the gross rental income for 7 months, which is subject to UK tax. So the gross monthly rent should be multiplied with 7 in order to see the amount of rental income that we have to take into account. And she cannot choose to be taxed on remittance basis because she is domiciled, not just resident. Being resident, you will have to pay tax, but being domiciled would mean that you do not have choices. It is always the arising basis. It's always the total basis on which you will have to pay off the taxes. So it is irrelevant that whether she retains all the property income in Grenia or she brings it to UK, she will have to pay tax on whole of her rental income, but starting from that point when she became resident. If she is just domiciled and not resident, she will not be subject to tax. If she is just domiciled but not resident, there's going to be no tax on overseas income. If she is not domiciled but resident, then we have like, if the income is less than £2,000, then remittance basis would be applied. If the income is found to be more than 2,000 or equal to 2,000, then they have a choice to make an election in between either a remittance basis or arising basis. And if a person is both domiciled and resident, then being a resident, the moment you become resident, you will have to include that income. But it is only the arising basis on which a person will be taxed. You do not have a choice to choose either the remittance basis or arising basis, right? If you are just domiciled but not resident, then overseas income should not be taken into account. By becoming a resident would mean that now you will have to include the income in your UK tax pro forma. But then how the income is going to be taken into account, either remittance or arising, or you have a choice. This is like all dependent on the fact whether alongside being resident you are domiciled or not. Is this thing clear? The overseas income could be tested this time as the concept of overseas income assessment is going to be changed from Finance Act 2025. Then all those topics which are either, whensoever they are going to be changed, there are likely chances of them to get tested in their very last attempt. So next time there will be an overseas income, but the way of calculation of that income will be a bit changed. Okay, now we are moving towards the second question. This is section B, which will be having two questions of worth 25 marks each. Here is the first question. Kindly read the background and then I'll open the exhibit for you people. All right, so now you must have gone through this question properly. In section B questions, once again, we'll be using mainly the Word document to draft our answers. And every time we'll be making a relevant heading. And whensoever, along with the explanation, a little bit of the calculation is required, we'll be handling the calculation on Word document. But in all such situations where comprehensive calculation will be required, then we will be making a heading on Word document and doing the whole thing on spreadsheet by putting the same heading that we have mentioned on the Word. And on the Word document, we'll have to get back by mentioning only the answer. And then within the brackets, we'll mention to the examiner that refer to the spreadsheet for the workings that we have done. But when it comes to requirement B, these questions are usually straightforward, as you are not going to adopt any particular communication style, neither the memorandum nor an email or notes. This is not this is not going to be done under any specific communication style. Rather, you'll have to just answer for the question being asked. So you'll be making short paragraphs or the bullet points in order to mention your answer, in order to construct your response. And I'll always be in a favor of making the bullet points just to show the valid points. And every valid point could be like as long as for 3 lines. Maybe one line is sufficient to mention a valid point. Maybe you'll be making 2 lines, but if you're going to go beyond 3 lines, then you'll have to split the that particular statement into like two valid points. Okay, so here the requirement is like specifically mentioned, not mentioned within the exhibits. This is like how it is different from section A. Now, when it comes to requirement side, I'm just going to enlarge the size so that we may easily read it. It says that explain. Okay, so you should assume that today's date is 1st of September 2025, and part A is that we need to explain the supporting calculations. With supporting calculations, the impact on the total amount of the tax payable by both Freya and Qua Limited if on 31st March Qua Limited pays Freya either a bonus of £20,000 gross or a dividend of £20,000. You should ignore the employment allowance. I hope you remember that the employment allowance figure is of £5,000, which an employer would be able to have in respect of class 1 secondary. And this is like carrying 7 marks. So if I have to deal with these 2 points, I obviously assume that 3.5 marks are associated with the first requirement, 3.5 marks are associated with the second requirement. And just to be on a safer side, I will be producing 4 valid points in order to discuss the first point and 4 valid points in order to discuss the second valid point. Okay, let me just tell you that, and if you have to go beyond 4 points, then that's perfectly fine. But do only if it is must. Okay, so this is basically the relevant information which you have to use, as Core Limited will be paying Freya a salary of £75,000 already in the tax year 25-26. So she is a high rate taxpayer. But they are going to pay her additional £20,000, but they are indecisive whether to pay it as a bonus or a dividend. Okay, I am just going to give you 3 minutes, and I really want you to make points. What if she is being given with a bonus? Try making the points, doing the calculation for both Freya as well as Score Limited if she would get 20,000 in the form of bonus. I mean, in the form of employment income. Your time starts now. So, have you been able to draft any answer? All right, I'm just going to once again copy and pasting the requirement, and I'm going to turn it into a heading. Is my voice audible to each and every one of you? So this is the main heading, the impact of total amount of tax payable by both the subheading either as a bonus, create a space, and the first subheading is being used, that what happens if she's going to be given with an additional amount of £20,000 in the form of bonus. Is my voice still breaking? Okay. Now, considering that she is a high rate taxpayer based on the fact that Freya is receiving a salary of £75,000, which makes me believe that she is a high rate taxpayer. If she is going to get £20,000 extra, she will have to pay income tax at the rate of 40% and see if her earning is, her employment income, her salary is basically a relevant earning for calculating NIC class 1 primary. If this is her earning, that would mean that she is like already paying NIC class 1 primary at the rate of 2%, because out of 75,000, first 12570 will be caught at nil rate, and then from 12571 till 50,000 to 70 she must have been charged with NIC at the rate of 8%. And now on an earning which is found to be in excess of £50,270, she was paying NIC 1 primary at the rate of 2%. And if she gets 20,000 extra in the form of bonus, this is also a part of employment income. So her increase in earning would lead to an increase in NIC, but she will, this amount will then be subject to NIC at the rate of 2% only. I'm not going to calculate her tax liability on £75,000 because they did not ask the tax to be calculated. The examiner is just concerned over this additional amount which is to be paid to her. So basically, the increase in bonus will lead to increase in her tax liability at the rate of 40% because she is a high rate taxpayer, and her NIC 1 primary will also be charged at the rate of 2%, right? The total amount of tax would mean that 40% income tax and 2% NIC. So she'll be bearing altogether 42% of the tax. It's like 42% of the amount that she's going to get in the form of bonus, which is of £2,000. So what would that be? That is going to be of £8,400. Thank you. So it's of £8,400. See, it was a little calculation required. So I did not go to the spreadsheet for doing the calculation. This could be easily done on the Word document. And now I need to see that what will be an impact on Core Limited. As Core Limited, the company, Freya's employer, as whensoever the employer will be paying anything to their employee that is said to be their allowable expenditure. So by paying £20,000 mean that first of all, this £20,000 is to be treated as an allowable expenditure. The corporation tax liability of Core Limited will be reduced, and hence their corporation tax liability will be reduced as well. On the other hand, Being an employer, whenever they're to their employees, they will be liable to pay class 1 secondary as well, right? So, first of all, I'll say that Qual Limited will also bear NIC 1 secondary at the rate of, I believe this would be of 13.8%. So, what is basically equivalent to 13.8% of £20,000? 13.8% of £20,000 will be equal to 2760 pounds. All right. And this £20,000 will be treated as allowable expenditure against trading profits of the company, and hence corporation tax liability will be reduced by, see, what is basically the current corporation tax liability of this company, which is Qual Limited. Could you see that their taxable total profit is of £80,000? So they are actually falling in the band of 25% less marginal relief. And this company does not have any associated company. They have made accounts for one complete year, and they are not even receiving dividend from any non-associated, unconnected company. Are you all getting my point? That on this £80,000, they must have charged the rate of 25% less marginal relief. So, how would I determine that what value, by what value the taxes will be reduced? I hope you, okay, one by one. The first thing is that it is not just £20,000, but there's like one more thing which is um, deductible against trading profits as well. £20,000 and this NIC class 1 secondary. This is also being paid by employer, by Qual Limited, on the behalf of their employees. So this is like something which is also going to be deducted against the trading profit, because whenever the employer is going to pay an employee an earning and any NIC for their employees, they both are an allowable expenditure. So altogether 22,760 will lead to a reduction in the profit, and hence taxes will be saved. Okay, the thing which I was like trying to tell you before, you must have gone through my recording where I said that whensoever we need to see that when losses adjustment against such companies are being made which are currently paying taxes at the rate of 25% less marginal relief, any reduction in the profit would lead to a saving of corporation tax by 26.5%. Why? Because though I'm not going into the detail once again, but a little bit of the detail needs to be discussed over here. As 80,000 pound is altogether something on which you are applying the rate of 25% less marginal relief, something which is less than 25% pound, 25% on the whole. But there is like another way of showing the same thing. On 80,000, we believe that up till 50,000, there is said to be an application of a little bit, a little rate of 19%. I mean, a very minute percentage is to be applied. And on the remaining 30,000, we are charging the most reactive rate of 26.5%. So if there is like the taxable total profit and augmented profit are same, when there is like no inclusion of the dividend from unconnected companies, either you are going to apply this thing 25% less margin relief, you are going to get the corporation tax liability to be paid by company, or if you are going to split the least reactive and the most reactive portions, you will exactly get the same answer. Though I always say that you will have to show the calculation of tax liability this way. But now what should I do, as there is said to be a reduction in the profit by 20,002 to 70 pounds, I mean 22,750 pounds, the marginal portion of the company is going to be reduced. When the marginal portion of the company is going to be reduced, it would lead to a saving of taxes at the rate of 26.5%. So I am going to take a leeway of just how we deal the losses adjustment thing. I hope you must have gone through that recording where the loss adjustment would lead to a reduction of the profit and hence reduction of the tax liability. And whensoever all those companies who are currently paying taxes at the rate of marginal relief, we tend to adjust losses so that their marginal proportion is going to be reduced and eventually they end up saving taxes at the most reactive rate. So 26.5% would eventually be saved. So it's like if 22,760 will be deducted, then corporation tax liability will be saved at the rate of 26.5% since company is falling under the marginal rates. So that's how the amount of tax saved will be, it's like 26.5% of 22,760 pounds. Could you please tell me how much of the tax will be saved in this regard? 6,029 pounds, right? All right. So I'm just going to mention few things. As when Freya will be given 20,000 pound in the form of bonus, she will have to pay 8,400 pounds. This is her payment. This is an expense. She will be paying NIC, one primary as well. Well, it is like included in it. And Qual Limited will have to bear 2,760. This is also an expense. But Qual Limited, on the other hand, will be reducing 6,029 pounds. Their corporation tax liability is saved this way. So by paying 20,000 pound to Freya in the form of bonus, we may say that overall the additional tax payable will be, it's like you're going to take the difference. 8400 shall be paid by Freya, then 2760 will be paid by Call Limited, but Call Limited will be saving 6029 as well. So in this situation, in total, how much of the tax will be paid? This is just going to be equal to 5129. Okay, and so let's see how many points I have made, though 4 points are associated with it. But see, all of these points were very essential, though I have made almost 6 points. But see, by minimum, I had to produce 4 points. But I couldn't avoid even a single point out of it. So if your answer is not being addressed in the minimum required points, then you may increase the number of points. But see, in the previous question, I did not go beyond the required limit. But in this case, I had to go beyond this. Why? Because obviously, by just showing the 4 points, I couldn't address to the issue completely. And then now I am going to see that what will happen if 20,000 pound is given by company to Freya in the form of dividend. Number one, when Freya will be receiving a dividend, she is a high rate taxpayer. So she will be paying income taxes over a high rate. And is she like already receiving any dividend? You must have gone through the question. Did you notice? Did she receive any dividend already? I think no information related to dividend, which she's like already getting, is given in the question. So she's not receiving any dividend before. So that would mean that nil rate band will be available. So I am just going to mention this thing as Freya is not receiving any dividend before. So there will be no nil rate band. And then being a high rate taxpayer, she will pay tax of, see, being a high rate taxpayer, her rate of dividend will be 33.75%, but this is like going to be imposed on 19,500. Why? Because first 500 is going to be covered under the nil rate band. Can you please tell me what, I mean, how much of the tax she will have to bear? See, if for instance she was already getting a dividend, then she will be like having, she must have utilized the nil rate band already. But as before, she did not get any dividend. So she still has a margin to utilize nil rate band. And how much of the nil rate band is available in case of dividend? That is over first 500 pounds. Remember? 6581. Thank you. So 6581 is the amount of tax that she will have to bear in case of receiving 20,000 pound as dividend. Now, what do you suggest? On dividends, will she have to pay any sort of NIC? Yes, nil rate band is available. Nil rate band is available. This is for the very first time she'll be receiving 20,000 pound if she gets that in the form of dividend. Okay, there is like no NIC in case of dividend. So dividends are not subject to NIC. neither the company nor the recipient, neither the payer nor the recipient, no NIC shall have to be paid. Okay, the company, Core Limited, as they will be making a dividend payment of £20,000, would they be able to make this deduction against their trading profit? Is dividend payment an allowable expenditure? Great. Yes. Dividend payment is not set to be an allowable expenditure. So no deduction will be made against trading profit. No tax liability will be saved. Corporation, there is no saving of corporation tax since dividend is not an allowable expenditure, right? So how much overall additional tax they will have to bear in this regard? I'm just going to copy the first line. Okay, this is not working. The overall tax, additional tax payable will be, it's like just 6,581 pounds, right? So it's like I have made 5 points. Okay, now you have shown the minimum required points. At least you've made 5 points, otherwise, four were the minimum. But once again, you really need to address to the whole issue. Though, if you just compare these two things, I must say that first option is more feasible because it is like resulting into an overall reduced amount of tax to be paid. But see, if you just have a look at the requirement, they just said that what is the taxes to be paid. Either we opt for option one or option two. They did not say that analyze the situation or come to the conclusion which one is the better option. If in case it is said, then obviously I must have produced the end result as well. And for instance, let's suppose if 11 marks are associated with it, then obviously 11 means what? 5.5 is associated to first point, and second, again 5.5, or to be safer side, 6 points are associated with this. So in order to make one more point, I may have included this point that under option 1, there is like lesser amount of additional taxes to be borne as compared to option number 2. Obviously, if more marks would have been associated with this requirement, of course this would then be the most relevant point, despite the fact this is not being asked in the question, right? Okay, now we are moving towards requirement B on the assumption that Freya will be paid the additional 20,000 as dividend. So for instance, if it is confirmed she's getting dividend, explain with supporting calculations the maximum amount which Freya can pay into her personal pension scheme in the tax year 25-26, which will qualify for tax relief, and why it will not give rise to annual allowance charge. Again, I'm just going to copy it. I'm opening the Word document, creating a little bit of the space to show the remaining, the next requirement, Control V. Now, I'm just going to remove few lines or a line to convert the requirement into heading. So the maximum amount which Freya can pay into her personal pension scheme upon receiving £20,000 as dividends in the tax year 25-26. Okay. So this is the appropriate heading. Have a look at the exhibit once again. So this is basically the information related to pension. And just have a look at the points given. I will make you people understand and will show you the standard solution directly, because if I just keep on like typing each and everything, this must be taking a lot of time. Okay. So see, in this case, which pension scheme Freya has joined? This is the personal pension scheme. Whether person is a part of occupational pension scheme or a personal pension scheme, they may make contribution according to whatever they want, but the maximum tax relief is restricted up to the value of earnings. So previously, as her salary was of 75,000 pound, which is a relevant earning, as relevant earning does include three things: the employment income earning, I mean salary, bonus, commission, then the tax adjusted trading profit, and FHL. Freya doesn't have a tax adjusted trading profit, and she's not even receiving income from FHL. So her salary would be treated as relevant earning for pension purposes. So as long as she will be contributing on the existing basis, she'll be contributing 75,000 pound into her pension scheme, or even less than that, that will qualify for relief. Though if your relief is going to cross the threshold of annual allowances, then this will be subject to annual allowance charge. But see, though the annual allowance charge for the current year and the previous year is 60,000 pound, but before that it was of 40,000 pound. Though 75,000 pound is like more than 60,000 pound, but if any annual allowance has been left unused from the previous three tax years, then there could be a chance that despite contributing a lot into her personal pension scheme, she eventually end up paying no annual allowance charges if any of the brought forward annual allowance is still left from the previous tax years. Now, the amount of the contribution, which is like qualifying already, is of 75,000 pound, because it is the relevant earning. And if I talk about the annual allowance charge, see, we do have a brought forward annual unused annual allowances from the previous three tax years if Freya has not been able to use her annual allowances in the previous three tax years completely, and she has to be a member of pension scheme as well. For instance, if she had not been a member of pension scheme previously, then this would mean that none of her unused figure of annual allowance is available. If she was a member of pension scheme previously, whether it's an occupational pension scheme or a personal pension scheme, and she couldn't have been able to utilize her annual allowances completely, then the leftover annual allowance can now be used. See what is the situation for the prior years. Yes, if she was not a member of the pension scheme, then any of the, I mean, she wouldn't have used her annual allowances, and they are not being brought forward as well. She has to be a member of pension scheme, and then maybe some or all of the annual allowances figure could be brought forward. Now, if I talk about the tax year 25-26, if I talk about the tax year 25-26, the annual allowance figure is of 60,000 pound, and well, this is available for the current year. And then for the previous three tax years on FIFO basis shall have to be taken into account as well. So tax year 22-23, 24-25, and 24-25 are to be taken into account. For that purpose, I need to see that what has happened before. She has been a member of occupational pension scheme previously, so she is a member of some scheme. And from the tax year 21-22 to 24-25, she had been contributing just 10,000 from her side into The occupational pension scheme, well, her employer, she used to work for ICE Limited previously, and ICE Limited used to contribute 30,000 pound on their behalf every year. In case of occupational pension scheme, the amount which employee contributes is given a tax relief in terms of an allowable deduction, and their employers will be, if their employers are contributing as well, that is also to be counted towards the tax relief, because that amount shall be treated as an exempt benefit. So 10,000 used to be treated as an allowable deduction. The employment income used to get down, the taxes were reduced, and that's how the tax relief was available. And 30,000 pound was treated as exempt benefit. Again, this did not lead to an increase of an employment income, and hence the income tax liability used to be reduced as well. I mean, this was like also acting as a tax relief. So altogether, how much of the amount was qualifying for tax relief? That was of 40,000 pound. See, if I talk about the tax year 22-23, the annual allowance figure was of 40,000 pound. And if 40,000 pound qualified for the relief, then what do you suggest? How much of the annual allowance is still available? Zero. No annual allowance was left unused, which could now be used at this point. But can you just tell me that what had been an annual allowance figure for the tax year 23-24 and 24-25? See, though the tax year 25-26 is new for you, but you really need to consider that the rates which you have learned in the tax year 24-25, they shall continue to apply in the foreseeable tax years. So, which is why I said that the annual allowance figure is of 60,000 pound. But do you know that what had been the annual allowance figure for the tax year 23-24 and 24-25? No, that used to be 60,000 pound. For 23-24 and 24-25, that was of 60,000 pound. Though we haven't taught you the annual allowance for the tax year 25-26, because this is like going to be the new year. This is going to get implemented from the next time. But see, whenever you are going to be asked for any tax year for which you do not have any idea, then you need to consider that whatever the rates relevant to the current tax years are, they shall continue to apply in the foreseeable future. So whatever is like relevant for 24-25, for which annual allowance is 60,000 pound, this will continue to happen for 25-26 as well. So that was like 60,000 pound for the tax year 23-24 and 24-25. And how much of the tax relief we got, that is of 40,000 pound, and that makes me believe that 20,000 pound is the unused figure of annual allowance which is still left unused from the previous two tax years. So that would mean that how much of the value will qualify for annual allowance charge. See, in the tax year, she is contributing her earning is of 75,000 pound. So she has 60,000 from the current year and 20,000 pound each from the tax year 23-24 and 24-25. And well, I must say that her contribution, her tax relief is not going to be caught under this rule. I mean, she will not have to bear the annual allowance charge, because altogether, how much of the allowance she is having, the current year allowance and together the brought forward annual allowances from at least 2 years, because in the tax year 22-23, the annual allowance brought forward value is nil. She is having a cumulative annual allowance of 100,000 pound. And how much of the earning relevant for pension purposes she has in the current tax year, for which she may claim a relief, this is like, well, quite low as compared to what is available. So we may say that she will not have to bear any annual allowance charge in respect of the tax year 25-26. And well, if we talk about 20,000 pound, which she is going to get the dividend, get in the form of dividend, unfortunately, dividend is not to be treated as a relevant earning for pension purposes. So if in case she decides to contribute 20,000 pound into her pension scheme, though she may do this, but this 20,000 pound will not qualify for the relief. Neither HMRC will be paying 20% of this 20,000 pound into her personal pension scheme, nor she will be able to extend her basic rate band with the help of that figure. Dividends do not Dividends are not to be treated as relevant earning for pension purposes. No tax relief will be available. It's just 75,000 pound that can still qualify for relief. The maximum figure that she may decide to contribute and have a relief is of 75,000 pound, and this is not going to be caught under annual allowance charge because of the availability of maximum annual allowance. In this case, she will not have to bear annual allowance charge. Yes, this is not the relevant source. It's only the salary bonus commission, employment income cash figures and trading profit and income from FHL, which qualify for relief for pension purposes, right? Let me just show you the solution and keep that thing in mind, that this question is once again for 7 marks. So I'm just going to pinpoint those lines which you need to mention. So the gross amount qualifying for tax relief cannot exceed her relevant earning, which is of only 75,000 pound in this case, right? As dividends cannot qualify for relevant earning for pension purposes, they will not get any tax relief. And if I talk about annual allowance charge, another heading, we know that the gross amount of all pension contribution should not exceed the available amount of annual allowances, and the maximum annual allowance will be available as Freya's threshold income has not crossed 200,000 pound. This is not even a relevant point. If you just skip it, that's perfectly fine, because if someone's adjusted income would be crossing the threshold of 260,000 pound, then their annual allowance could be tapered off, but that's okay if you do not mention this point. And then another line would be, the available amount will include unused annual allowances brought forward from the previous 3 tax years if she has been a member of pension scheme, which is obviously the case over here. So first valid point, second valid point, third valid point, and then the fourth one. Both Freya and ICE Limited contribution to occupational pension scheme must have counted towards pension contribution relief and must have used annual allowance every year. This is like going to be regarded as fourth point. And then comes the fifth point, which is why how much of the unused annual allowance she may have. You are just going to show this calculation. The maximum annual allowance available in this case is of 100,000 pound. And then as the available allowance exceeds the maximum gross contribution, which can be paid in order to obtain full relief, she will not incur any annual allowance charge. This is like going to be your sixth point. And this is obviously an important one. If she decides to contribute 75,000 into her pension scheme, she herself will be paying 80% of the amount, while 20% shall have to be paid by HMRC on her behalf. So this is how we'll be mentioning the whole thing in the form of 7 valid points. And this requirement is also carrying 7 marks, right? Is this thing clear? Is this thing clear to each and every one of you? Yes, you may get a copy of the solution. I've already shared that in with my enrolled students, and we have made a link, and that will be shared with each and every student whether they are enrolled or not. Yes, we do have a solution and that will be shared. All right, now let's have a look at the last requirement of this question, the requirement C. Now, the requirement C of this question is of 6 marks, and they are asking that in respect of both the proposed gift of shares in TIMP Public Limited Company, explain whether or not gift holdover relief will be available, and on the basis that the relief is claimed where it is available, calculate the base cost of the shares to the recipient in each case. I'm just going to copy this requirement again. I'm going to word processing documents, pasting it. So, in respect of both of the proposed scheme, see, I have cut a certain statement and I'm going to paste it over here. I will say the availability of gift holdover relief in respect of both of the proposed gifts of shares in TIM Public Limited Company. And then I'll mention the base cost as a second subheading, right? So this seems to be like fine as far as discussing the availability rules in terms of gift holdover relief are concerned. So let's have a look at the exhibit. See, again, I'm telling you that with section B, the requirements are mentioned separately, though let me just tell you one more thing, that when it comes to section A, see, when it comes to section A, though we do have a tab for requirement as well, but this is like a general tab in which it is said that whatever is like mentioned in the last exhibit, you need to carry out those instructions, and 40 marks are going to test your concepts, while 10 marks are associated to those people who will be demonstrating their professional skills throughout their like answer. So this is like a general requirement being given, and it's always within the exhibit itself, the last exhibit precisely related to section A, which will be carrying the requirements. Okay, so this was like done. I'm quickly moving towards this section B. I'm going to show you the exhibit once again, which proposed gifts they are talking about. So this is the information. Let's have a look at it once again. All right. So, as you have gone through this part once again, let me just tell you that gift holdover relief will not be available. As you may see, that the gift of the shares is not a qualifying business asset, as the company is a quoted company in which the donor used to have at least a minimum shareholding of 5%, which is not the case over here. Which is why, as she does not hold at least 5% of the holding, so gift holdover relief will not be available. So, gift holdover relief will not be available as the gift of shares are not a qualifying business asset, right? So this is the first thing. As in case of gift out of quoted companies, the shareholding has to be at least 5% to qualify for relief. As Tim doesn't hold 5% holding, which is why no relief is available. Okay. So this is how we have mentioned 2 points. And then the base cost thing had to be mentioned as well. So now what is the base cost for shares? As Tim is gifting shares from the quoted company, when she will be gifting the shares, she will have to compute the gain, and the recipient must be acquiring the share over its market value, though no relief is available. So, market value at the date of transfer shall be treated as the base cost. Now, what is the market value of the shares? If you just have a look at the question, the market value of the shares transferred is not given. But in such cases where the market value is not given, you must be given with the higher quoted price and the lower quoted price, and you're going to take a mid price, an average of these two prices in order to determine the market value of the share. So this would be like, okay, how many shares are being gifted? This is not 10,000, this is 5,000. So I am going to determine the market value for 5,000 shares. The recipient will record market value of the shares on the day of gift as their base cost. The market value of each share is, it's like, I'm just going to take an average of the higher quoted price and the lower quoted price. The lower one is 10.29. Sorry, the lower quoted price is 10.3 and the higher quoted price is 10.92. Now just going to take an average, the mid price of these two figures. Can you please tell me what is basically an average of the higher and the lower quoted price? It is 10.3 being the lower quoted price and 10.92 being the higher quoted price. It was not 10.29. 10.61, thank you. So 10.61 is said to be the market value of each share being gifted. So the base cost of shares will be it's like the shares being gifted 5,000 and the market value of each share is 10.61. So the overall market value will be of 53,050 pounds. Is that so? Is is this calculation correct? 53,050 pounds being uh, the market value of the shares gifted. Right. Thank you. So this is how I have produced 5 valid points, and this requirement was for 6 marks. So is there anything left behind? I have explained whether the gift holdover relief is available or not. By the way, it is not available. And then base cost of the shares is calculated. But see, gift holdover relief is not available. And I have determined the base cost of the shares as well. But what other relief they may have in this regard? See, this is the gift being made to a trust. Is that so? This is the gift. 5,000 is the gift given to her daughter, while there's another gift being mentioned in the question, and that is of 10,000 pound, which is given to the trust. So, if I talk about this gift, whenever the transfer to trust is made, then number one, of course, in the life of Freya, she's making a transfer to a trust. I will have to first think about CGT and then I'll have to think about inheritance taxes. Well, the shares that she has gifted to her daughter, there is like no inheritance tax implication at all because it is a pet in the lifetime. But as she's like transferring 10,000 shares in the same tax year to the trust, number one, though this is the chargeable transfer for CGT purposes, but the gift holdover relief will now be available. Why? Because gift holdover relief is available as the gift is gonna be treated as a chargeable lifetime transfer. If anything is like going to be caught under inheritance tax rules, gift holdover relief will be automatically available. So I'm just going to make another heading this time. So I have made separate headings. Gift of 5,000 shares. This is like something which has been discussed. And I'm just going to discuss the gift of 10,000 shares because it is another gift which Freya has made in her lifetime. But this time round, these 10,000 shares are being given to trust. Now, I would say that when it comes to CGT, gift holdover relief is possible as the transfer is subject to inheritance tax immediately. So all those transfers which are immediately caught under inheritance tax rules, it is an automatic thing that gift holdover relief will be available. So there's like no CGT implication for Freya as far as these 10,000 shares gift is concerned. Now, when it comes to an IHT implication, I just need to see that what the taxes will be, but just have a look at the requirement once again. Did they ask you to calculate the inheritance tax thing? In the requirement, did they ask you to touch inheritance tax point as well? though I do admit that it is subject to an immediate inheritance tax implication, which is why gift holdover relief is automatically available despite the fact she does not hold at least a shareholding of 5%. But they did not ask us to do a further calculation showing what a lifetime IHT will be. Similarly, if you just have a look at the question, they said that discuss both gifts. I have discussed the first gift. The first gift was pet for IHT, which is why I had to think about CGT, and unfortunately, gift holdover relief was not available because for that purpose, a minimum shareholding requirement has to be there. But when it comes to the second gift, which is the gift to trust, as the gift made to trust is a CLT, which is like being caught immediately under inheritance tax rules. So if something is like immediately caught under inheritance tax rule, um, the gift holdover relief is immediately available despite the fact minimum shareholding of 5% is not being met. So gift holdover relief is possible when it comes to the gifting of 10,000 shares, as it is subject to IHT immediately despite Tim doesn't hold 5% shareholding, right? So in that case, which is like automatically covered under gift holdover relief, we will not see whether the shareholding criteria is being met or not. And for both gifts, the second thing is that you need to determine the base cost of the shares. Now, just take 1 minute, and I really want you people to tell me that what is going to be the base cost of shares. Let me just help you that whensoever anything is being transferred, market value at the date of transfer shall be treated as cost for the recipient. So the trustees, I mean those who are controlling the trust, the market value at the date of gift is, as each share is having a market value of 10.61. How did I determine? It is like determined in the first gift by taking the average of higher and the lower quoted price. The market value of each share is 10.61. And in this case, we are talking about the gift of 10,000 shares. So it's like the market value at the date of gift is of 106,100. But in case of this transfer, I just need to see that how much of the gift holdover relief is possible, because this is the amount which is going to get deducted against the market value, and then we will be able to determine the base cost of these 10,000 shares for the recipient. Now, what I am asking you people to calculate, just tell me that what is the amount of gain which is being held over in the form of gift holdover relief. You will have to calculate this thing. Let me show you the exhibit. Does anyone have an idea that what the gain figure is, which is now going to be held over against the cost of the shares for the CPL? No idea? Okay, I got one answer. £128,000. I'm happy that you have at least tried. Everyone should try because this is how you'll be able to learn how the things are answered. Okay, just think in a step by step manner. When Freya gave the gift of 10,000 shares to trust, market value at the date of gift shall be taken as disposal proceed, right? Yours answer is 24,100. This is like getting close to the correct answer. Okay, so whenever the gift is going to be given, whenever the gift is going to be given from one person to another, market value at the date of gift shall be taken as disposal proceed. I hope you know this thing. Gain on the gift of shares. So, what is equal to the disposal value? It is the market value at the date of gift, as 10,000 shares are being gifted, and market value of each share is 10.61. So, the overall disposal figure will be of 106,100. Against this, we are going to deduct the cost, and you have to figure out that what the cost for these 10,000 shares is. According to the information given in the exhibit, Freya acquired 30,000 shares at the time of the death of her mother. Whenever someone is acquiring any property as a result of someone's death, it is the market value at the date of death which shall be treated as their cost, which we call as probate value. So the market value at the date of these shares, how many shares were these? 30,000. It is of 210,000 pound. So technically 210,000 pound being market value on the day of death, on the day when it is like going to be transferred from Freya's mother to her, that shall be treated as cost for 30,000 shares. Okay, so if 210,000 pound is said to be the cost for 30,000 shares, I need to see what is the cost for 10,000 shares. And this is how we'll be able to come to know how much of the cost is associated with these 10,000 shares. Can you please tell me what the cost is? I believe that has to be 70,000 pounds, right? 70,000 pound. So what is going to be the gain? The gain on the disposal of shares, on the gift of shares precisely, will be of 36,100 pounds. Though at the as a result of gift, Freya will not be paying tax on this 36,100 pound. Why? Because the whole of the gain will be held over under gift holdover relief. But why the holdover relief is possible in this case? Why would she why wouldn't she be paying taxes in this case? Because this gift is an immediate subject to inheritance tax, which is why, despite having low shareholding percentage, she will not have to pay any CGT at all. The gift holdover relief is available. So when the recipient, the trustees will acquire the shares, number one, the market value at the date of gift shall be treated as their cost, whether the gift holdover relief is available or not. For the recipient, market value at the date of gift shall be treated as cost. But if the gift holdover relief is possible, which was not there in case of gift of 5,000, but it is the case over here, when the gift of 10,000 shares is made, then the amount of gift being held over shall be treated as a deduction against the cost of shares. So 36,100 will be deducted against the market value of the shares transferred. So this is how we'll be able to come to know what the base cost of shares will be. This is going to be equal to, I believe, 70,000 pounds. So what is the market value of, what is the base cost for the recipient in respect of these 10,000 shares? This is of 70,000 pounds. So this is basically required. Is this thing clear? Now, students, in today's session, I have tried to tell you that how the questions related to Section A will have to be handled, and similarly how the Section B questions are to be handled. Well, in this case, these questions were predominantly theoretical in nature, but whensoever I had felt a need to do a calculation on the spreadsheet, then I'll be mentioning the answer on the Word document and will be doing the calculation on the spreadsheet, and then I'll be mentioning on the Word document that refer to spreadsheet for the working, while putting the same heading on the Word document as well as on the spreadsheet, so that my examiner can easily make a cross referencing of the two things. As the time is up, so I'm not going to question number 3, but I'll be sharing the solutions related to question number 3 as well. But if you people have come across any problem in relation to what we had discussed with respect to question number 1, requirement C, and this question number 2, please let me know by dropping your concern in the dialog box. And then let me just tell you one more thing, that how you will be strategize your last 10 days. If there is anything else you have felt while doing the question with me, please do let me know. Or if in case you have anything in general in reference to advanced taxation exam, then please drop your concern in the dialog box. Well, the next class is on, I'm just like not 100% sure, but this is like before 19th. Let me just confirm that. I shall be sharing the detailed plan with you people, as we'll be holding a pre-mock session in which section A question will be given to you people. In fact, it is like going to be a 3-day session. On day 1, I'll be discussing a question of worth 25 marks. Then on day two, we'll be like holding a pre-mock session in which you people will be given a time to solve a question of worth 50 marks. And then on day three, I'll come again in order to discuss the solution of that section A question with you people. So technically, this activity will be spreading over 3 days. On day one, we'll discuss section B question. On day two, you'll be handling section A question yourself. And then on day three, I'll be discussing that question with you people. And afterwards, we'll be holding a grand revision session. And then you will be taking up mock on 21st. And then mock debrief will be taken up once your answer scripts will be checked. Right now, I'm just having a difficulty in accessing the planner given to me, sorry. And but I hope I'll have an access to that thing shortly, and then I'll be discussing it. I'll be definitely sharing that thing with you people. And if you people have any apprehension in that regard, then I'll definitely be discussing that thing as well. Well, what I believe from the initial thing that we will be meeting on, I think, 16th. But again, I'll be sharing the whole thing with you people in few hours. Okay, anything else which you still find to discuss, which is like still apprehensive? If yes, then please let me know by dropping your concern in the dialog box. No issues? Okay. So people, now you really need to be fast and try covering up your syllabus as soon as possible. Maximum by 17th, you shall have been done with each and everything. Try spending maximum time so that you people may get done with each and everything. Your syllabus for the first time should be covered by 17th. And if you're already done with this, that's perfect. Afterwards, you'll have to use e-notes for the sake of revision purposes, and simultaneously, you'll have to do the practice and try spending at least 6 hours on daily basis for the whole activity. I'll be sharing the list of important questions with all of you people. Though with my enrolled students, I believe I have already shared the list of important questions already. And these are those questions which you really need to prepare before appearing in the exam, and that will ensure you to have a success through your exams. And the most important thing is that you people will have to appear in mock exam, which is going to be conducted on 21st of February, because if you people will handle the whole of the exam under the same exam condition, only this way you people will be able to develop a confidence, and only this way you people will be able to get through each and everything confidently. And I just wish that all of you would be able to pass your exam. So the time has come to wind up the session. Wish you all the people a very best of luck for your advanced taxation exam and every other exam that you are going to opt in March 2006 examination. Once again, best of luck. Have a happy weekend. Goodbye. I'll be sharing these 25 questions along with the solution in your global group. Goodbye, people.